Welcome back to the Making Sense of Money podcast presented to you by P1FCU, where we tackle all the financial topics that matter the most to you. I'm your host, Tanis, and on today's episode, we are going to be discussing a topic that I'm very excited to learn more about, gap insurance. Gap might seem like just another expense, but it really does make all the difference when life throws you a curveball. To help us better understand this product, we have our very own VP of Member Engagement, Jennifer Piper. Hi, Jennifer.
Hi.
How are you?
Good. How are you?
You go by Piper.
Yes. You can call me whatever. It'll work.
Perfect. Starting off, what is gap insurance?
Yeah. Gap insurance is really important. Let's set the stage for that. Gap
Yes.
insurance is basically what protects your balance. It protects your vehicle. So the balance of what you owe versus what the value of the collateral is if your car was to be totaled or stolen and deemed unrecoverable. So essentially when we buy something, sometimes we don't put as much down, or maybe we had to trade in a vehicle that had negative equity, and our loan amount's going to be more than what the vehicle is worth. If something was to happen to that, the insurance only pays out a certain portion. So the gap insurance comes in and protects you for that gap.
Fills that little gap.
Yes.
I love it. So obviously it's important, but it doesn't replace auto insurance.
No, absolutely not. You absolutely always want to have auto insurance to protect you. This is just an additional protection that complements your auto insurance should your vehicle be totaled.
Gotcha. Can you think of any specific scenarios that, gap would be useful for?
Yeah. So gap is useful in a couple key scenarios. Number one, the negative equity. So we're trading in collateral that maybe isn't worth as much as what we owe. So we're going to put that on the new loan. Maybe I'm buying a collateral and I'm not putting as much down. So my general rule of thumb is if you're putting 20% or less down, gap is important to have because vehicle values change every single year.
Mm-hmm.
And it's really dependent on a lot of factors in your area. So in whatever area you live in. So having that, you could lose value quicker than you anticipated.
Sure.
The other thing I would say is just in general, if you put a large amount down and you'd saved up it a long time and you put it down and you don't have that and something happens to your collateral, you don't have that money to put down on the next car. So having that gap can help as well. So really, those are the three key scenarios. The last one I would say is, how often do you drive? So if you are a commuter and you're on the road a lot or traveling a lot, your mileage is probably increasing at a higher rate than the standard, and that can impact value as well, which means that you could potentially have a gap on what you owe versus what the car is worth.
Gotcha. Then it doesn't necessarily have to be like a negative kind of like loan to value situation, right? Like it could be like I was in my first car wreck a few years ago, and that was obviously awful. Hopefully it's my last. But I had gap insurance and ended up I owned less than what, or I guess I borrowed less than what the car was worth. So I kind of made out in that situation because gap still applied to my next vehicle. And I was kind of like, oh, wow.
Yes.
And then from there, it's like, you don't know until you know.
Yeah. It's like any insurance, right? We don't take auto insurance thinking we're going to wreck tomorrow.
Totally.
It's to prevent us from having, an unintended impact financially if we wrecked tomorrow.
Right.
So it's that type of protection. And depending on where you purchase the gap, a lot of them have different benefits that you get to take advantage of for future loans as well.
Right. It's almost like not if, when it's going to happen, because
Yes.
it's probably going to happen.
Yeah, I recently read a study that from 2023, 27% of all accidents resulted in a total loss, meaning the car was deemed totaled.
Right. Which doesn't take
27%.
much either. Like a total loss, sometimes it's like, whoa, really?
Yeah.
Like it was just like the front end or whatever. And that's wild.
Yep.
That's alarming, honestly. You kind of touched a little bit on when people can purchase gap, but what can they purchase it mid-loan? When's kind of like the timeline?
Yeah, the most ideal time is fairly close to when you took out the new loan, whether that's a new to you car or a new car. It's when the loan is new for you. And that's the most ideal time. Depending on where you're purchasing it, sometimes you can purchase it up to 6 months after, but that generally depends on who's going to be offering you that gap protection.
Got it.
At the end of the day, We just want you to have gap protection. So,
Sure.
You want to look at all of those factors, but you have a little bit of time in some cases to make sure you're protected.
Right. Okay. Awesome. Do you know how much Gap typically costs, and if it's worth the investment, or is that different everywhere you look?
So it's different. There's a pretty solid range. So by no means, is this exact, but it could range anywhere from $400 all the way up to $1,500 now in the market. Just depends on the type of collateral, where you're purchasing it from. In the case of some of the insurance companies who offer it, that's brand new collateral only. That's typically a monthly. So it just depends on what that monthly cost is.
Gotcha.
So it's a variety, but your second question of, is it worth the investment? As somebody who's had to use Gap,
Right.
I will absolutely say there's never been a vehicle I took, regardless of the loan to value of the vehicle, that I didn't have Gap on.
Right. Absolutely.
That cost, if you think about it, if you go buy a warranty on a TV, right? A lot of us buy warranties on TVs or things like that because we don't want the TV to go bad.
Right.
That cost out of pocket's $1,000, $2,000. Buying Gap on your vehicle, you're protecting a potentially $20,000 investment that you've made.
Absolutely. Definitely worth the investment.
Yes.
Absolutely. Is it better to purchase Gap through the lender or the dealer, would you say?
I would say it's better to just purchase Gap.
Doesn't matter from where.
So
Yeah.
I think as any good consumer, you need to evaluate what makes most sense for you. Every single Gap protection is going to have various benefits to it, depending on where you purchase it. And the best thing we can do as consumers is to compare and figure out what is going to provide us the biggest benefit for our financial situation.
Gotcha. And that's something typically car buyers can expect from our lenders, right? They talk about it, at least what we can offer. But we do suggest to shop around maybe insurance companies or dealers or whomever has the best rate.
Yeah, we absolutely, when we're engaging with our members on that, we're going to share what product that we have and the various things. We have some added benefits to it that may work for that person's financial situation and be an added, protection. But we're going to encourage them, take what you know from here and take what you know from there and compare and make the best decision for you.
Right.
Because at the end of the day, the collateral being protected is what's most important because that helps the member's financial well-being in their long run.
Right.
And depending on, how they do their finances, if they use Skip-a-Pay, things like that, that'll allow them to pick the best product for themselves.
Totally. And those premiums you spoke on, those, that the 15,000 to 1,500 or whatever, that's like the annual premium or typically?
So typically it's a one-time. And then insurance companies are different, so I would encourage them to speak with their auto insurance company if they have questions. But typically, if you're purchasing from a dealer, it is a one-time fee that you pay.
Got it.
Yeah.
Or you can also, it can be included in your loan amount.
Yep, it absolutely can be included in your loan amount.
Which is huge. I mean, especially for, if you're wanting that nice new car, but the payment, you have to make sure that payment is within your budget. I mean, splitting it up through your payments, I think, is super helpful for, especially first-time car owners.
And it gives you the convenience of having the protection, but also the benefit of having a fairly budgeted payment.
Totally. I think it makes it. I know my Gap most recently, it was like maybe $6 added to my payment, and I'm like, wow, okay, yeah, why wouldn't I do that?
That's not even a coffee today.
Absolutely not. My coffee was way more expensive than that today. Can it ever be typically too late to purchase Gap insurance?
It can be, depending on where you're at with the collateral, because your loan to value changes monthly, right?
Right.
And so normally that 6-month window is the best window to put it in. A lot of you purchasing it from a credit union, they may allow you to add it past that, but that's pretty rare.
Yeah.
Dealers and insurance, you have to add it right up front. So
Got it.
I would say it's never too late in the sense of to think about it, but it could be too late to add it. So your best action is to do it at the time.
Yeah.
And, reflect on it a month later. And if you don't want it, cancel it. But truthfully, once you reflect, you generally go, ooh, yeah, I need this protection.
And it's great too, because as we learn, as we get older and grow, we get to teach our kids about this kind of stuff too, because, as they get older and it starts coming time to talk about buying a new car and, what's important and what's not, that's definitely a conversation to be had. So that's really good information. Enough about the doom and gloom. of totaling vehicles, because it is a little bit of an alarming thought, we do ask all of our guests one question, and that is, what do you wish that you would have learned earlier in life about money?
I think that it's not so extreme, right? It's like dieting. We often think we have to go to the extreme. And what do we end up doing? We fall off of it. And so I think money's the same way. You go to the extreme of, I can't have any coffees, or whatever your, I call it a vice, or your treat to yourself is, retail therapy day, whatever it is. I think you oftentimes, I wished I wouldn't have been like, oh, I can't do that, because then, sometimes you hit those points in life that maybe you go off the other end and not, then you're in a predicament. And so I think if I would have known early on, like, just find a healthy balance.
Yeah.
Don't take everything from yourself, still live life,
Yeah.
but also find ways to be smart with your money. I think that could have been a better approach from my youth days.
Totally. I love that. That's something that you don't really quite think about. It's not that serious.
Yeah.
It doesn't have to be.
Yeah.
I love that. So you think that realization has definitely shaped the way you manage your money now?
Absolutely, yeah. I'm not going to give up the things I love, but I'm going to budget them differently, right? So that I don't go and then overspend on those areas.
Yeah, no, absolutely. Good stuff. Thank you, Piper.
Yeah.
That's really all we had for you today. I appreciate you sharing your knowledge with us and spending some time before you hit the road.
Thank you.
Yes. And thank you, everybody, for watching. We hope you learned something new today and you feel one step closer to making sense of money. Don't forget to subscribe and check out our newsletter at p1fcu.org. We'll see you next time.